Let's bring in Scott Bauer. We've got the CEO of Prosper Trading Academy to join us. He's actually had a minute to look at this number. Not much more than that, Scott. Appreciate you joining us this Friday and sharing part of yours with us. But am I wrong here? It looks like in line with expectations, the one component, personal income, fractionally higher, a tenth higher than analysts were looking for. But other than that, they hit this one on the head.
You know who's happiest about this, Ben? It's the traders, because now going into the long weekend, they have a number that is right in line.
I like
the
it.
market,
Yeah.
Very, very slight reaction.
Yeah.
They can do what they need to do on the opening of the market and get out of here. But Fed Powell obviously loves this as well, because this doesn't change the narrative whatsoever. It doesn't add any pressure to say, oh, no, we've got to go 50 instead of 25. Or the other way where, we're seeing things get hotter again. So the big anticipation going into this here, this is exactly what the market wanted to see. And what I think is going to be the interesting number today is the one that Kevin Green has continued to point out, and that's 5630 in the S&Ps.
Okay.
Can it get through that? Because it's failed there numerous times. If it can get through that and hold through that, boy, this market could have some room to go here, Ben.
Okay, you're talking about the SPX.
Yes.
Okay, because the futures are through it right now, 56.36, 56.37. Scott, I like that assessment on the number here today. I kind of think of it as sort of, this has been sort of with the grain, right? Nothing to disrupt or to blemish the narrative that we've been seeing. And, you know, I kind of feel like traders are practiced at what you just described with these sort of buildups into these Thursday, Fridays.
Yep.
I mean, it's the end of August right now. We can expect things to be possibly kind of quiet with this number coming in line with expectations. Again, nothing to derail the momentum or disturb or, disrupt the positive energy we've seen off those August lows.
Exactly. And it has been a very busy week. You know, this week
Absolutely.
in general, leading up to Labor Day, is typically one of the lowest volume weeks of the year, trading volumes. And it's been busy. I expect that to taper off quite a bit today. And these numbers are great. Now all eyes are going to be focused on next week's jobs number. That'll be really the last big number that the Fed has to look at before they're meeting a few weeks out from there. I personally still think 25 is going to be the number. 50 would, I don't want to say break the bank. 50 would spook the markets. I think 25 is the appropriate number. The one number this morning, Ben, after I had another second to look at it, that really stood out to me is that consumer spending, that was actually up a tad. That was a tenth of a point higher than expected. Yeah. And that just shows, even though we're hearing that the consumer is changing their spending habits and some of the higher end consumers are maybe pricing down a little bit, it is still showing how resilient this consumer is.
Yeah, July spending 0.2% higher than the June numbers. Scott, what does this do for the Fed? Solidify 25 basis points? You mentioned, again, 25 versus 50 and some of the concerns that the market might have related to. Or do we need to wait for the jobs report next week to really kind of have that determining factor?
They're definitely going to look at the jobs number. But, if that number is not out of the realm of what is expected one way or the other, I think 25 has to be the number again, Ben, because 50 to me senses panic. 50 to me, if the Fed were to do that, would tell the market, you know what, we are really behind the curve and we've got to catch up. That's the last thing they want to do, and that's the last thing they want to do going into the election.
I'm looking at the dollar. I'm looking at the euro currency holding up on these year-high prints. I mentioned at the top of the show, you got European stocks, the indices just off all-time highs. Some of the data, as I look globally across the board, kind of feeding into what the Fed would like to see as well, because we've been keeping an eye on, again, Europe, Japan, for example. Core CPI overnight, earlier this morning, 2.8%, down from 2.9 on a year-over-year basis out of Europe. As I look at the headline number, month over month, 0.2, slightly higher than last month, year over year, 2.2. I mean, these are really hitting the sweet spot, Scott.
Absolutely, especially that number you just mentioned, the euro inflation, 2.2% year over year. That is really hitting the sweet spot. They are catching up to where we have been trending lower now. So you are seeing this globally, where inflation is coming down now and things are, I guess you could say, getting better. We are ahead of the curve, I believe, and that's why the Fed is going to make a move. Again, though, if it weren't for the election, Ben, I think they might tend towards that 50. But as much as they say that, the Fed is independent, they don't think about those things. I do think in reality, you do have to think about that, and 25 is the appropriate number.
Scott, I've been describing some of the data as well. It's got Fed Chair Jerome Powell's feet up on the desk. He's lighting up a cigar. And
yes.
To your point a minute ago, I mean, the numbers out of Europe, Christine Lagarde has probably got a stogie in her hand as well. I wouldn't be surprised, right? But what's this mean for the dollar and yields? Should we expect some more sideways consolidation, or with expectations that yields are going to continue to come off, not just one cut in September, but more cuts to come? Do we see further weakness there?
I think it all depends, really, what you see out of other currencies as well. We know that we know we're going to see, some softer prints here, and that would put some downward pressure on the dollar. But if these other currencies, especially if the euro, if the pound, if in Japan, if the yen, if they don't really act on what they've been saying, getting hawkish,
that could change
actually provide, that could actually provide a little bit of a boost for the dollar.
Okay, I like this. Focus on what's going on here in terms of the data, the Fed, but keep your head on a swivel because, again, the global narratives is play as well. And sometimes tough to tell which came first, the chicken or the egg. Was it the euro currency or the rates on the decline here in the U.S., that run-up we saw in the British pound? Oftentimes, Scott, we do appreciate you helping us kind of sift through and work through the data as well as your take on it. Scott Bauer joining us this morning, CEO, Prosper Trading Academy.